that new gadget, those must-have sneakers, the perfect vacation package. But if you could get it all right now and worry about the bill later, that's the promise of buy now, pay later. One of the fastest growing financial trends in the U.S., it's a world of instant gratification. But is it a financial lifesaver or a debt trap in disguise? Welcome to the Economy Unpacked Daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. Today, we're diving deep into the world of buy now, pay later. You've seen the logos at checkout, but what's really going on behind the scenes? In simple terms, BNPL services allow you to purchase an item immediately, but split the cost into several smaller installments. These payments are typically made over a few weeks or months, and the main selling point is that they are often interest-free, provided you pay on time. You've probably seen the big names. Klarna, Afterpay, and Affirm are pioneers in this space. But now, even giants like PayPal and Apple are in the game with their own Pay in 4 and Apple Pay Later options. This isn't just for small impulse buys anymore. Consumers are using BNPL for everything from fashion and electronics to expensive travel bookings. These services are particularly popular where younger consumers shop online. Tapping directly into the spending habits of millennials and Gen Z by understanding how BNPL works, we can better navigate its place in our financial lives, separating it from traditional credit cards. So, why has this payment method exploded in popularity? The psychological appeal is undeniable. Splitting a $200 purchase into 4 payments of $50 just feels lighter and less intimidating than putting the full amount on a credit card. It removes the immediate financial burden, making the purchase feel more manageable and guilt-free. This resonates strongly with younger generations. Millennials and Gen Z, often wary of traditional credit card debt, are drawn to these low-commitment, transparent payment options. They grew up in a digital world and expect financial tools to be just as seamless and convenient as their other apps. BNPL delivers on that expectation. There's often no lengthy application process or hard credit check required, unlike applying for a new credit card. This convenience feeds directly into our culture of instant gratification. Why save up for weeks when you can have the product in your hands tomorrow? This combination of psychological ease, generational preference, and sheer convenience has created the perfect storm for B&T's rapid growth. But convenience often comes with a hidden cost, and BNPL is no exception. While the interest-free promise is a major draw, the financial model relies on late fees and penalties. Miss just one payment, and those interest-free terms can quickly disappear, replaced by hefty fees that can make your purchase significantly more expensive than you originally planned. It's a classic case of reading the fine print. The bigger risk, however, is the potential for overspending. With multiple BNPL options available at nearly every online checkout, it's dangerously easy to lose track of your obligations. A few small payment plans for different items can quickly add up to a significant monthly debt burden that you might not have accounted for. This is compounded by the fact that many BNPL providers perform only soft credit checks, or sometimes none at all. This means consumers can be approved for loans they can't realistically afford to repay, creating a cycle of borrowing to cover other debts. And Dan TB mistaken, while it might not feel like traditional debt-missed payments, can still be reported to credit bureaus, potentially damaging your credit score and affecting your ability to get loans for a car or a house in the future. This isn't just a problem for individual households. It has ripple effects on the broader economy. The rapid, unregulated growth of BNPL has created a new frontier of consumer debt. And when this debt goes unpaid, it can create stress across the entire financial system. Worryingly, some studies have shown that delinquency rates for BNPL loans are climbing and, in some cases, are higher than those for credit cards. While a credit card company carefully assesses a borrower's ability to pay back a large credit line, the frictionless nature of BNPL can lead to riskier lending. This accumulation of shadow debt, debt that is always tracked by traditional credit reporting agencies, poses a real threat to household financial stability. If a family is juggling multiple BNPL payments and faces an unexpected job loss or medical bill, they can quickly find themselves in a debt spiral. The ease of access that makes BNPL so appealing is also what makes its misuse so dangerous on a macroeconomic scale. The rapid expansion of this industry has not gone unnoticed. Regulators in the United States, particularly the Consumer Financial Protection Bureau, CFPB, are now taking a closer look at the BNPL market. They are examining the practices of major providers, focusing on issues like inconsistent consumer protections, data harvesting, and the potential for accumulating overwhelming debt. The goal is to bring more transparency and standardization to an industry that has largely operated in a regulatory gray area. As regulators step in, the market itself is also adapting. Traditional banks, seeing the threat to their credit card business, are beginning to launch their own BNPL-style features. This influx of competition from established financial institutions and tech behemoths is making the market fiercely competitive. The likely outcome will be a push for greater consumer protection, clearer terms, and more responsible lending practices as companies vie for trust and market share. This regulatory and competitive pressure aims to ensure that consumers are adequately protected and that the industry operates on a level playing field. Given these risks, how can you use BNPL safely and smartly? It all comes down to treating it with the same respect you would any other form of credit. The first and most crucial step is to budget before you buy. Never use BNPL as an excuse to purchase something you couldn't afford with cash or a debit card. Before you click Confirm, make sure the installment payments fit comfortably within your monthly budget. A second key strategy is to avoid overlapping multiple BNPL plans. It's easy to manage one or two, but juggling payments for 5 or 6 different purchases from various providers is a recipe for disaster. Keep a close watch on your repayment dates by setting reminders or using a budgeting app to track your obligations. Finally, and most importantly, remember that BNPL is a short-term tool for managing cash flow, not a long-term financial solution. It should never be a substitute for sound financial planning, saving for large purchases, or building an emergency fund. By approaching BNPL with knowledge and discipline, you can leverage its convenience without falling into its traps. Looking ahead, the financial landscape is set for a fascinating battle. Will BNPL disrupt the credit card industry and become the dominant form of payment for a new generation? Or will it find its place as a complementary tool? The future likely lies somewhere in between. Credit cards offer rewards, purchase protection, and a revolving line of credit that BNPL doesn't, but the simplicity of BNPL is a powerful draw. The key tension will always be between technological innovation and consumer risk. As the industry evolves, we can expect to see more integrated financial products that blend the best of both worlds. However, this evolution will be heavily shaped by regulation. Stricter rules around credit reporting, fee transparency, and affordability checks could fundamentally change how BNPL providers operate, hopefully creating a safer and more sustainable ecosystem for everyone. The future of BNPL isn't just about technology. It's about finding the right balance between convenience and responsibility. So, as we've seen, by now, pay later is a classic double-edged sword. On one hand, it offers unprecedented flexibility and convenience, making purchasing more accessible. On the other, it carries hidden risks of overspending, mounting debt, and financial instability if not managed with care. The key is to be an informed consumer. Before you split that next payment, take a moment to think about your budget and your long-term financial goals. Now, we want to hear from you. Do you see BNPL as a benefit or a risk for the future of finance? Let us know your thoughts and experiences in the comments below. And if you found this breakdown helpful, please give this video a thumbs up and subscribe to Economy Unpacked Daily for more insights into the world of money. Thanks for watching.